Client of mine, I'll call him Marcus, right? In today's scenario, came to me about 9 months ago now. And he was running basically a fully remote consulting business, good money, making 6 figures a year, total profit. And he'd been living in Southeast Asia for about 3 to 4 years, bouncing between Thailand, Bali, a little bit Hong Kong, other countries like Laos and the Philippines. Okay, he had no fixed base, no tax residency anywhere. He'd actually properly established. And he was starting to get pretty nervous about it, as you would do with these people leave their actual home countries and may never actually get their tax residency. So he read somewhere that the Philippines offered a way to live there legally and almost pay no tax, right? And he was able to run his business internationally, completely tax-free and compliantly. And he wanted to know if this was true. And I simply said, it's complicated, as that is the truth. Not because the Philippines is a bad option. It generally isn't, but for the right person structured in the correct way, it can be extremely tax efficient. But the way people and gurus speak about it online is basically just move to the Philippines, move to Thailand, and you pay 0% tax, right? Or worse, you land in a compliance problem that takes you years to unwind. Your banks start asking you questions. Where do you live? Where's your utility bill? And you don't have one. You've been living in Airbnbs, right? So today I want to give you a full picture, the honest one, that actually holds up with scrutiny. We're going to cover the Philippines tax system in some great detail, actually how it works with foreigners, and particularly the RHO HQ structure, and why it's generally interesting, and what the 9G visa gives you and what it doesn't, and where the whole thing falls apart if you are not careful. Okay, so let's get straight into it. First things first, let's speak about the actual current Philippines tax system, okay, and how it works on foreign nationals, because this is where most confusion starts. The Philippines operates in a system that's basically a source-based tax system for non-resident aliens. The issue is when you stay more than 186 days, you then become a resident alien. So it can sound brilliant because you're like, okay, tax-free, non-resident alien. But if you spend more than 180 days a year there, you obviously become a resident alien. And now that can tax you up to 35% of your worldwide income, even if it is foreign sourced. So the person who moves to the Philippines thinking that they've gone on and escaped global taxation, and then spends 8 months a year there because they love it, and as you should do, it's a beautiful country, which is very easily to do, right? Has just made themselves fully taxable and everything they earn globally without even realizing it. And again, they can come at you for doing this, okay? That's mistake number one, and it's the most common mistake as well. We see this the same in Thailand, Vietnam, Bali, Cambodia, whatever, right? These Southeast Asian countries. Okay, now there is a way around this. And this is the thing that makes the Philippines generally interesting for international business people, again, which is a regional operating headquarters structure at RHO HQ. And to understand that, we need to talk about the 9G visa. Okay, so the 9G visa is a pre-arranged employment visa that's issued to foreign nationals who are employed by a Filipino registered business, and on its own it's fairly unremarkable, to be honest. It's a work visa as we would compare to other countries around the world. But here's where it gets very interesting. The visa is issued in a connection with an RHO HQ, right, which is the regional operating headquarters, and comes with a specific tax special treatment like other regimes we have seen in the world. So it's almost like nothing else in Southeast Asia. We used to see Thailand be extremely competitive with the foreign income being fantastic, but now they've gone and changed that since 2024. One of the reasons why I personally left Thailand. Now, foreign nationals employed by a registered RHO HQ in the Philippines pay a flat 15% tax on all their global income. Okay? Now, all their foreign sourced income is tax-free. When I said the global income, that's your global income into your personal accounts. The rest that stays abroad in corporate entities can remain tax-free. Now, let me be clear about this. The 15% applies to what the RO HQ pays you as your Filipino employment income. And there has to be a great arm's length agreement. You cannot just pay yourself $1,000 a year, for God's sake, right? So let's be clear about that, okay? The income from your offshore company into your other company, your foreign investments, your business interests outside of the Philippines, that actually sits, in terms of the corporations, they sit fully offshore in those companies. Yes, you can't remit it into the Philippines. You can remit it through your Filipino company, and that's the right way to do things. Yes, there's a grey area. Or you could pay yourself into your Singaporean private bank and spend over it. Technically, you could do that, but we can imagine those laws will be changing. However, those offshore companies can remain completely tax-free. Then your Filipino business, you basically pay yourself $85,000 a year, and you literally pay less than $10,000 in tax on that company right there. So for someone like Marcus running an international consulting business with clients entirely outside of the Philippines, it's generally an amazing position. He was consulting with his own business, paying minimum Filipino tax, and able to keep his war chests in British Virgin Islands, in the Cayman Islands, XYZ, wherever Mark had his offshore companies or his trust structure. He was able to keep this tax-free with no regulation on those CFC rules. So what the ROHQ actually is a specific type of Filipino registered entity just for foreign people, okay? It's administrated by the SEC and the BOI, and it's designed for multinational companies who want to establish a regional hub in the Philippines. So yes, you can't just leave this entity dry with zero bank balance, right? But you can use it to your advantage, okay? So in terms of who qualifies, we're looking at general administration and planning, business development and marketing support, which is very, we see a lot of VAs, logistics coordination, training and personnel management, research and development support, treasury functions for the group, and technical support and communications. Those are generally the third parties that you can set this business up as, right? Trading, again, any activity that generates Filipino-sourced income in a conventional sense. And that is what fantastic. So for Marcus, his consulting fees continued to go through his offshore company, but then he ran his support team out of the Philippines. Was basically moving the money from there to there, gave that company 120 grand. It was costing him 30 to 40 grand a year. And then he paid himself a healthy $68,000 in his salary, and he effectively paid 15% tax on that one there. Now, what's important is he now has TRC status. He can now be public about this, that he's living in the Philippines, and he actually has a base in terms of his tax residence. So that is generally what goes on there. However, there is another, that's all good news, right? But zero tax in the Philippines, it's not quite, but it is towards that. To register the ROHQ, the parent company must look at remitting $200,000 into the operational capital. Okay, so Marcus got away with a much lower amount because he's just a small consulting business, right? And he had a nice agreement with him. He said, look, I want to use your local staff. I want to make this a regional hub for the support services for my consulting business. I'm happy to employ people here as well, but I don't think it's going to reach $200,000. So he happily agreed. I think it was like $128,000 or something that he needed over it. And then he paid the majority of this, 75% of the change for profit after he's paid those staff and some bills for a new Filipino company. He was then able to just pay himself as a salary and leave the rest in the business for annual running costs for the ongoing next year, which is then 2026, which we're currently in now. Now, here's a thing I find myself saying to every client who comes to me in the Philippines, as I said it to Marcus too. The Philippines can only make you tax efficient in the Philippines. It cannot solve your own country problem. If you're a British national, the UK's residence test still applies to you. If you're German exit tax rules are there. If you're American, well, that's not great because you've most likely got an American passport where the US taxes its citizens on worldwide income regardless of where they live. Full stop, and no offshore structure changes without a formal reunification. And for Marcus, a British national who left the UK properly, fewer than 16 ties, spending under the relevant day counts, okay, The UK side was very manageable. He's done the work to establish a non-residence properly before he even came to me with those UK tax advisors, right? So the Philippine structure sat cleanly on top of this, and that was fantastic. Before that, he was actually living in Belize. So he obviously had some Belize companies, that was his main consulting entity, right? It still carries out, it's very hard to get the substance requirements in Belize, but he managed to get them, but that's another story, right? But I've had conversations with people who want to use the Philippines as their general tax base without having properly exited their own country first. So we're going to help many clients around the world exit their own country, and it's getting trickier and trickier to do so. Okay, and it's very important that you do things properly. You know, you work with those general counsels, you work with trusted parties who know what they're speaking about. Yes, you can chat GPT, you can get somewhere in knowledge so we can all have a great conversation, but do not rely on AI for your exit taxes, for example, right? You know, get it wrong and you'll end up paying 15% in the Philippines and 45% in the UK on the same income simultaneously. And again, that's not an obvious answer when you start to chat GPT. You're like, oh, I'm sound. Double check that you are sound, okay? So the cost of living in the Philippines is extremely favorable. I'm sure you all know that already. I don't need to go into how great the Philippines is. But let me be straight with you. It's generally suitable for a lot of clients. Because the internet nowadays has been able to people to run businesses such as myself online, you know. So a lot of people are living in Southeast Asia, and it works well if you're running an international business. Your income is high enough to justify that floor of around 200,000 to 300,000, right? If your income is 200,000 to 300,000 on your personal side, this could be a great structure for you if you do want to spend a lot of time in the Philippines. Now, it does not work well, obviously, if your business depends on Filipino source income, if you're American, or you want simplicity. It's quite a sophisticated structure, and we have to work through it, you know, one by one, because there's other things outside the structure that then also sit in place: banking networks, agreements, intercompany agreements. Make sure you're ticking all the boxes over in the offshore jurisdictions as well, with those local substance requirements that are becoming ever increasing. But I hope you learned a lot from this video today. You can work with the Philippines really well and pay effective rates on the total income of basically next to nothing if the actual business income is sufficient, right? It's not for somebody earning 100,000 US dollars a year, 100% not. But for somebody such as myself who earns more than 6, 7, 800,000 and does multi millions in revenue, this could be a great solution for you. And again, if you do want to get in contact, you have the links below. I don't need to tell you that. So I hopefully will have a lovely conversation with you, and I'll see you in the next video, guys. Cheerio. Bye-bye.